Ladies and gentlemen, welcome back to the Sustainable Web3 Singapore 2023 conference, sponsored by Huawei Cloud. Now we look at Western Australia and Southeast Asia. We are privileged to have Dr. Andrei Gwiazdowski, lecturer, University of Western Australia, who will moderate the panel on sustainable decentralized Web3 infrastructure. Dr. Andrei's panelists are Daryl Dunbar, Senior Advisor, GreenSquare DC. Daniel Keynes, Head of Risk, Blocksquare. And Walt Couston, Founder and CEO of GreenSquare DC.
我们非常荣幸地邀请到嘉宾 Daryl Dunbar, GreenSquare DC 高级顾问 Daniel Keynes, Blocksquare 风险主管 Walt Couston, GreenSquare DC 创始人兼 CEO， 有请各位。
I know that there's probably more people who will be watching us online on video than the modest audience, but a very committed audience that we have here. I see there's a lot of us here still glued to our mobile phones. I'm not going to ask you to switch them off, but could you imagine if you could leave, or I give you a choice just to make it more engaging. You've heard about power outages. You've heard about outages in the internet, where banks go down, where you cannot get your money. You've heard about perhaps Optus in Australia, where 10 million people didn't have access to the internet. In some cases, in life-threatening situations. Now, I give you a choice. We're sitting in a nice, comfortable air conditioning room. Would you prefer to spend a day without air conditioning or a day without the internet? So, who is for the day without air conditioning? One person. A day without the internet. Oh, hey, 2 or 3 people. Good detox. Now, but this, just besides an anecdote, this, the fact that we may potentially lose access to internet is not just our convenience of checking the news or maybe being on social media. It has serious implications for national security, for life-threatening situations, and mainly for economy as we're moving into decentralized and more powerful options or upgraded options as we would like to think in Web3, where our money is actually in data centers. So no more physical cash if you are interested in central bank digital currencies or any other options, but our money actually being in data centers. To what extent is this infrastructure decentralized and sustainable so that it can support us and feed the new growing economy? And we're just at the beginning, at the cusp of this new economy. There is no more time actually for academic discussions here. We always, as an academic, I probably should be the last person saying that. We welcome research, but at this stage, we know that we need a much more powerful data centers and digital infrastructure as we're going into AI and fully digital economy, much more immersive. Now, our current infrastructure can potentially choke on the centralized data points of failure, and we don't have a proper diversification. So at this stage, we don't have much more time for kind of academic discussions, and that's why I'm so excited to bring to the panel practitioners, people who devoted their lives and careers to working in that space. Walton, the CEO of GreenSquare DC, Daryl, who's doing the international operations and has incredible wealth of experience, starting at NASA about 30 years ago, well-versed in digital economy and data centers. And Daniel, who will be talking about decentralized real estate, how to actually put real estate and assets on the blockchain to make the economy much more inclusive. But as a kind of starting point, I want to show you some numbers so that there is no doubt. These are the numbers. The estimates of the digital growing economy that will be powered by blockchain and AI is about $35 trillion by 2030. So that's much more than the GDP of the United States, Singapore, and Australia put together. So we know that the economy is going to grow massively, but we don't have enough and powerful data centers to support it in a diversified and secure way. Now, that's a problem here, because on the one hand, we have a potential growth, huge growth, but we know that these data centers, the conventional, traditional data centers, are consuming a lot of power, fossil fuel power. And we know also from recent research that this will cause the increase of global warming by close to 2 Celsius degrees, which is deadly to humans. So if you feel hot outside of the cool room today, that's going to be much more deadlier tomorrow. So how do we solve that problem of growing economy, but also being ecologically sustainable? And the third problem is those technologies, especially AI, will take your jobs. And that's not a joke, that's not a conspiracy theory. This data comes from the World Economic Forum. About 40% of jobs will be gone by 2030. 40%, all jobs. So how do we address those burning issues? And that would be perhaps the context for my first question to our panelists. How does big global trends affect business from your point of view? And how do you deal with these kind of questions on the local business level? Any of you, welcome.
Well, I think it's very clear that we're facing an energy crisis. If we're talking about this kind of consumption and data centers, it's been pretty quiet about it until recently, and I think people are starting to wake up and realize how much power data centers actually consume, and how much heat they reject into the atmosphere. And something has fundamentally got to change. We're hitting the intersection of, we're just now beginning to electrify everything. Electric cars are going everywhere. We're trying to decarbonize and move away from fossil fuels and shut down power plants, coal and gas-fired power plants, and move to variable renewable energy. And it's not happening fast enough. And I think we're at the forefront of being at risk of being called power hogs, or part of the problem as opposed to being part of the solution. And I think where we come in is to try to be part of the solution. How do we do this? How do we distribute the data center compute assets? How do we cool them, power them more efficiently? How do we produce more power than we actually consume so that we're good citizens of the planet? How do we make sure that we can put them in geographies where perhaps there's free cooling to be had, or it's easier to cool? You will have seen a lot of data centers going into the Nordics, for example, over the last few years, because they can use free energy to cool it. So I think, if anything, it's at the point of a crisis, but it's also at the point of enabling. So when you think that 40% of all work is going to go away, that may not necessarily be a bad thing, because there's a lot of people who theorize that if you free up humans from the mundane tasks that they're doing, they move on and do much more interesting things. And perhaps there's more intellectual capital and intellectual work that'll be done as some of these roles are taken over. So while I think there's risk and there is an impending crisis, I also think there's opportunity.
Well, Walt, what do you think? Do you see that because you talk a lot with your customers, with stakeholders. Are these issues important to them?
If I'm being deadly serious, sustainability as a thing in our industry that we can definitely speak to is still a really, really, really nice to have. It's still not a must have. But again, we're in a, if we went back only a few years, then it wasn't even a really nice to have, right? And I can tell you one thing about the data center industry. It's an industry that's almost allergic to change. And the reason why it's allergic to change, why I say that, is that the most fundamental tenet of any data center has always been resiliency, keeping that light up, i.e. not letting them go down, that we've seen a few times recently. Fundamentally, the best way to keep the light on is to not change anything. So if you were looking back from this point in time back in history, the risk with data centers was change. The interesting thing though is, moving forward, the risk is actually going to be not changing, because there's a lot of stuff that's now going to happen because of this decarbonisation, and especially because of these changes that's happening in the white space. These chipsets are getting hotter and hotter. GPU and generative AI-enabled servers are at 10x increase in power, therefore heat. So the whole cooling environment, the whole design architecture of a data center has to fundamentally change. And that's a real challenge for the sector, and that, if I'm being honest, the reason why we chose this time to come and pursue this is because we know that it's an industry that struggles with change for a very real reason. I'm not being mean to the industry in saying that. Everyone in the industry agrees. And so I agree with Daryl. It is absolutely, it must change. I see there's opportunity as well. Some of these increases, that's happening with generative AI and large language models, the increase in density, that can actually lead to greater sustainability because your data halls get vastly smaller, which means your data centers can get much smaller, which means from embodied carbon perspective, like we're going to be pulling out in our data center in Perth over 1 million tonnes of embodied carbon. With liquid cooling that you virtually have to do to cool these GPU-based servers, they're also 20 to 30% more energy efficient. Therefore, they use 20 to 30% less power and lower PUE than traditional data centers. So there is great opportunity out there, but now is the time for enablers to come and play that important role, and that's what we're looking to do.
Thanks for that. I'll probably drill a little bit more on those technical questions, how you do it, but I would also like to give an opportunity to talk to Daniel, who I would like to know from you, how do you deal with this kind of issues to make the economy more sustainable from the social point of view? Daryl mentioned that it's going to be good. Some people will be laid off. They have more time for doing intellectual work. Maybe in the transition period, they will be economically struggle. So is there any solutions that we can, the blockchain Web3 technologies could provide to those questions?
Yeah, sure, absolutely. So I think from a tokenization perspective, I think we really have the ability here to democratize the real estate asset class. I think it's historically acted as a way to preserve wealth and also sort of foster economic inequality where barriers to entry were incredibly high. But through the use of tokenization, we can lower those barriers. We can allow people from vastly different economic backgrounds to now participate in this industry. And that participation can take place in a whole number of ways, from access and participation in co-living to being able to invest in real estate at a level that meets your personal financial circumstance. So the challenges that you've highlighted there are really core to the challenges that we're trying to solve. Yeah.
Just to be practical, I see a lot of young people, and many of my students are probably your age, and they struggle with one question. I don't have the same opportunities as my parents. To buy an apartment in Australia, Western Australia, a modest apartment, what would be the price? 2-bedroom. $500,000?
Oh, easy.
Easy, yeah?
650.
$650. What about Singapore? How much would you pay? 2-bedroom apartment. Could you afford it as a graduate?
1.2 million.
Yes, over 2 million. So these are real problems that tokenization could solve, right?
Yeah, no, absolutely. I think it would allow you to not only invest in real estate at a level that meets your personal circumstance, but also to build up a diversified portfolio of real estate, geographically, based on usage type, and that way, there's really a greater level of managing the risk associated with investing in an asset class, rather than owning a block of apartments where your concentration risk is incredibly high. You can now diversify out in many different ways.
And that's a good point of diversification. So I would like to bring us more to the very special relationship Singapore has with Australia, and especially Western Australia. And if we can explore some of the opportunities from a geopolitical point of view, economic and ecological point of view, how do you address some of those opportunities, and what kind of solutions do you provide? Yep, any aspect? Walt, yeah?
Either one of them?
I'll start.
Yeah, right.
I guess in the digital age, it probably starts with connectivity. If you don't have connectivity, you probably don't have that much to worry about. Certainly the West Australian coast, and also so does the rest of Australia, is very well connected. Perth, as an example, has 5 subsea cables, of which I think 3 or 4 go directly to Singapore. From a latency perspective, it's got half the latency than the East Coast, than Sydney or Melbourne or Brisbane into Singapore. So that's a really important one. I think a lesser known feature, I think some people know that, but a lesser known one is Australia and Singapore share a somewhat unique digital free trade agreement that is an agreement that's only been in place for a few years. My understanding is Singapore only has similar agreements with, I believe, the United Kingdom, New Zealand, and Korea. So I think there's only those countries that have that. That enables, in this world of increasing cybersecurity and data sovereignty.
That's, maybe we can pause here. I'm not sure whether we are aware. That's a very important question. We're talking about diversifying and decentralizing physical infrastructure.
Yeah.
But on the one hand, that's something that is very much desired. On the other hand, there is regulations that may restrict banks, for example, for moving the data overseas.
Yeah.
But having that agreement, for example, could change the game.
Yeah, absolutely. And it is something that is quite unique, and it's something that I think it will become more and more powerful. I think we probably all agree, and certainly in the data center industry, very much the thought is that data sovereignty is going to get more and more important, more powerful. More countries are going to enact, and with less trust, which is not a great thing. It's not a great outcome, but it's the way we're all heading, unfortunately. And so that document and that enablement of data to move freely between, say, Singapore and Australia is really key. And just another thing as well, economics at the end of the day always drives outcomes, and from a, Singapore is well regarded as being the most constrained data center market in the world, and also the most expensive data center market in the world. So if you have your data sitting in a data center here, and obviously there's a very real reason why, there's a very real reason why Singapore became the second largest data center market in the world as well. Rest assured, you're paying more than everywhere else in the world. And let's say we're building out 96 megawatts down in Perth at our WAI1 data center. We would be in round figures around half the rate. So
you mean half the cost of data center currently
half
here?
the cost to as compared to Singapore, and the power is less than half.
Wait a second, how do you do it?
What's that?
Could you explain that from a kind of technical point of view? How do you do it that it's half cost? That's a big claim.
A lot of it is supply and demand. So because there's very high, supply and demand sets pricing, and very little else really matters. So in Singapore, very, very high demand, very low supply. It's the reason why, go figure, the rate is so high. It's the highest data center, it's the most expensive data center market in the world. So, and to be honest, in this point, it's not just us in Perth that can be substantially cheaper. Lots of markets can, because again, supply and demand. So, but what other markets can't match West Australia in is that power pricing. So Western Australia has some of the cheapest power on Earth, which is very unique.
What sources of power are we talking about? Green power.
We are doing our own green power. So we've got our own 300 megawatt wind and solar farm out at a place called East Hyden that's in planning. Western Australia has, through a domestic gas reservation policy, so it reserves a lot of its gas, so it doesn't compete on global markets for its gas supply into its grid. So it's very unique in that regard. So your biggest monthly and annual fixed cost in any data center is power. So we can provide power that is significantly cheaper than Singapore, and significantly cheaper than almost any market in the world.
And it's green.
And it's green.
Well, it's a transition today. So we have to realize that realistically today, Australia has deployed approximately 0 kilowatts of renewable power, and it is in the transition fuel of natural gas and the natural gas reserves, because Western Australia is a net exporter of natural gas. But that will change. And as Walt said, we have a 300 megawatt developable site for wind and solar. But it's not just the cheaper power, it's also doing it more efficiently.
Yeah.
So being able to cool the data center more efficiently, being able to reject the heat is the technical terms of how we do that more efficiently, overall costs less to provide that service. And I think it's important, while I'm on the technical thing, it's important to think about these GPUs. So what powers AI, right? It's actually GPUs. It's from people like NVIDIA and others are developing them. Now, if you haven't seen one, a GPU is about the size of your iPhone or your Samsung Galaxy or whatever, a little bit thicker, the actual chip itself. However, what sits on top of it is a chunk of steel that weighs 5 times what the chip does. And that's just to reject the heat off that chip. It's just air cooling. Now, if you can get, and there'll be transitions that'll get us there. So we'll see what we call rear door heat exchangers, which is effectively a big radiator with cold water flowing through it off the back where the hot air comes out from the chips. And then we'll see direct to chip, and we'll eventually see immersion. And as you start to be able to do that, you can remove this excess weight. You can remove this unnecessary material and the very inefficient heat exchange of air, because basic physics, water exchanges heat 5 times faster than air does. So you can imagine if it's 5 times more efficient at pulling heat out, then it will take 5 times less the energy to get that heat off of those chips.
Could you, I'm just kind of aware that many people in the audience hear this number as X megawatts. Could you exemplify visually what that really means? Like, for example, the power consumption or you know, yes, examples so that we can see it.
So in Perth, we're developing out, and in stages, we'll get to about 100 megawatts. We're getting to 96 megawatts, let's call it. And that is enough to power around 150,000 houses.
Oh, okay.
So just to put it in some level of perspective, and 150,000 houses is a lot of houses, right? So it's that hopefully gives some perspective.
And in terms of the GPU and the data, how much of the market could you potentially cover? For example, if you were addressing the Singaporean market.
Well, I think it's a really interesting question about the Singaporean market, because it has some artificial market dynamics. And, you know, as Walt said, supply and demand determines prices. But when you put externalities in, for example, you have a conflict between a statement that's widely believed that we call it data sovereignty. That means that any sort of private information, your banking details, personally identifiable information, has to remain within the boundaries of the city-state. That is probably not true, but and I live in Singapore, so Singaporeans like to double confirm. So what we need is MAS to actually come out and say, yes, you're allowed to host this information, say, in Perth. But the conflict is between saying you have to keep things resident, and by the way, you can't build any more data centers. I don't think it's probably not widely known in the room. It may be that about 3 years ago, Singapore put a moratorium on the building of any new data centers, and they just said stop, and they stopped for 3 years. They've now released a small amount, we consider it small, it's 80 megawatts to 4 different providers. That's only 20 megawatts per provider. We're saying that's about a 1,000, 2,000 square meter building. It would be a 10 or 20 megawatt facility, so they're not very, very big. And that has forced an unnatural dynamic in the market. Yeah. So if you're allowed, if you can get past the privacy and the security of that data, then basically all of the Singapore market would be addressable in a place like Perth or perhaps even Johor Bahru.
Since we are in the Web3 context here, and the questions in the previous panel were all about decentralized ownership and tokenization. How about blockchain tokenization could address some of these questions that all of us have a little bit of a share in some of the infrastructures, not only decentralized physically, but also in terms of governance and ownership? Are there any solutions in blockchain and kind of tokenize?
Sure, yeah. Well, I think firstly I just want to speak about the partnerships that you've mentioned that are happening within the region. You know, I think these are great, and they can probably be surmised is that all ships rise with the tide, right? I think it's only going to foster regulatory and legislative synergy within the region, and this is going to help, you know, a lot of the points that were just mentioned a moment ago in terms of the cross-border trade. I think it's also going to help foster the sharing of human resource, and more importantly, that human resources and the talent pool remain within the region, particularly in Web3, where there are other regions around the world that are also doing a lot to grow their respective industries, and it can ensure that those talent pools remain within the region and they don't go for greener pastures in the Americas or Europe, for example. So absolutely, I think these partnerships can only foster good results. So we just
yeah, no, I was kind of coming back to the question of tokenization.
Sure.
Can we participate in? I'm not sure that your company would allow that, but probably not.
I think it would be
I'm putting you on the spot. We didn't discuss it.
Yeah, no, exactly. I think it would be really challenging. I love the notion of it. I think the notion of it is really interesting and even somewhat compelling. I think where it could fall down and not pass the pub test, as we call it in Australia, is from a government regulation. When FIRB, so to have any foreign investment in a data center in Australia, it has to be approved by FIRB, the Foreign Investment Review Board, and I think that one of their big the onuses of their investigation is always who exactly are these investors, and we want to know everything about them.
So regulation.
Again, it would be great if we didn't have to live in a world like that, but again, here we are.
Sure.
So I think in that regard, it might be a challenge.
It's going to come down to ownership and governance.
And responsibility.
And who is responsible. Yeah. So, I mean, we were talking earlier about outages. There's been outages in Australia. There was an outage a few weeks ago here in Singapore with a couple of the banks going down. And ultimately, who can MAS, the Monetary Authority of Singapore, look at? And, you know, where's the one throat for them to choke when they say you're not allowed to have your bank down for this period of time? And it happens to be one of the data center providers that I won't name, but who appears to be the one on the hook. But the banks ultimately, MAS can't reach through to the data center, but they can to the bank. And then thereby the bank can then go. And so as I think it's the future, but as we do this digitalization and distribution. I mean, I was on the internet back in the US when it was still called DARPANET. You know, it was a research project. That's how old I am. And it has grown and we've seen it, and it was always designed to be highly distributed.
Correct.
And without a single authority. But we actually see all the internet services providers trying to run their networks as a single command and control authority, which is why Optus went down 2 weeks ago in Australia.
Yeah, I think I'd just like to slightly counter your point, because I think it's really important. You're going to need to provide a clear line of sight to the investors that are holding equity of some sort in your organization or your building or whatever the asset is that you're tokenizing. And I think Blocksquare, as an infrastructure provider of technology, saw this from the outset. So the technology that we provide in terms of allowing people to operate their tokenization marketplace has the security or securitization features embedded in it. So that's KYC, that's AML, that's ensuring that everybody that participates in your marketplace is registered, is known. Of course, then what we do is facilitate bridges inward to more of the decentralized world. But in terms of allowing that's a technology feature that we do have.
I think it might have just been, and I agree, and I appreciate that feedback. I think it might just be the volume, you know, like FIRB might be just used to looking at one or two investors. Again, and it could be, it's very unproven, right? It's just all theoretic at this stage. But if there's like, oh, we've got, you know, I don't know, 40, 50 investors, that might make them go, ooh, we're not.
Sure, no, absolutely. I think, there's a lot of question marks and grey area there, but you know, in terms of exploring ways to finance new solar farms, for example, how you would go about that, you know, tokenization is definitely an avenue to at least explore.
Sure. So we still have regulatory challenges, but the technology is already there. As I say, the future is already here, but it's not evenly distributed. So from the challenges that we kind of encounter, do you see any challenges and issues in your market that can stop your business from getting where you want to get? Any obstacles, any issues and challenges?
Power.
You mean like who control human power?
And I think that's industry-wide. I mean, that's not a question I think that you know should be put just to to one data center provider. We're competing for this power, right? This power that's being brought online, whether it be renewable or not, it's gonna charge your Tesla. It's going to increasingly be needed for other things, and we're competing for that. And if you want to think about the internet and the data center industry as being arcane and slow to move, just go talk to a utility, for Christ's sake.
Yeah, it's a good point. Daniel, would you like to add anything? Like, what would be the challenges for you for tokenization of?
Sure, yeah,
real
absolutely. Well, I think there's the umbrella answer that's given for the whole industry in terms of Web3, which is regulation, regulatory uncertainty and obtaining that clarity. But I think when we're dealing with real estate tokenization, there are also some more specific challenges around regulation and legislation which we face. One of the largest is synergizing and connecting with the land registry of a country and ensuring that we can provide tokenized real estate which is reflected on the title of a property with the land registry. And I'm proud to sit up here today and tell you that we're the first organization in the world to have a tokenized real estate property notarized and added to the land registry of a country, and within the EU, nonetheless. So this is definitely a challenge that we're facing, but also a challenge that we think we found a solution for.
Thank you. Do we have any questions? I usually finish with questions from the audience. And those who are watching us on, I don't know whether it's going to be a YouTube or some kind of internal channel, if you would like to reach out to our panelists, that's Green Square DC, with the CEO, Walt, and Daryl, responsible for international relationships, and Blocksquare. There's a lot of squares. It's a kind of Web3 coincidence. And Daniel from Blocksquare. My apologies. So we're almost out of time. Thank you very much. Thank you, our distinguished panelists, for being here. And,
Thanks, Andre.
We're looking forward to the drinks.
Thank you very much.
Yay.
Networking. Thank you.
Yay.
Thank you.